Hi everyone, welcome back to the channel on the college process. Once again, I'm Ed from Principia Prep, and today we're going to be going through, as we do every Friday going forward from here on in, we're going to be answering all the questions you guys left for the last week or two on the YouTube channel so I can get more detailed answers for you guys for your questions here in video format, which I'll load back onto YouTube so you guys have all the questions answered that you guys asked me here on any of the videos we have here. So going forward, if this is your first video watching on the channel, very simple. Any video you guys watch on the channel here, every Friday I go into all your questions here, answer them in video format, and then put all the answers back in detail format onto YouTube. So if you have questions on this video or any other video, or in college process in general, just leave them on any one of my videos and I'll answer your questions back in video format in detail. So right now we'll start off with the first question here from Rick C. From 2 weeks ago, my son accepted the $5,500 unsub federal loan and also received an athletic scholarship. My wife and I want to pay the difference he'll owe after taking these two items into consideration. Would you suggest going private loan or Parent Plus loan? Also, are loans to be applied for by semester or school year? The way it works is the loans, most of the loan rates that you're going to kind of figure out what they're going to be is going to be happening roughly around the middle of June. Now, the way it works is you guys don't need to apply for any private loans or federal loans at this point in time. What you're first waiting for is to get back the school's bill. The school will typically send the bill out, typically around June 15th to the 20th, that time frame. That's when I would suggest starting to shop around for loans. At that point in time, by the way, when you do shop around, whether you're doing federal loans or private loans or state loans, almost all the loans, regardless of who you're applying to from a tier perspective, private, public, federal, etc., they all take about 15 minutes to do the application. So you get pre-approved pretty quickly. This doesn't take like weeks and weeks like a mortgage kind of thing. It's very fast. In addition to that, once you do get approved and once you decide to go forward with a loan as far as choosing the terms and the interest rate and everything else with them, then what happens is after you do all that, then the loan will actually be sent, a notice will be sent to the college, typically within 24 hours. So if you're looking at it from the perspective of most schools want a loan in place or a payment plan or the fall semester paid by August 1st, as long as you do this loan any day, really 2 days before August 1st, do the loan stuff, you're perfectly fine, you'll be covered. Now, when it comes to choosing a time frame of whether we should go semester or full year loan, I typically suggest going with a full year loan. So you're doing the whole academic year. So for next academic year, fall and spring, doing a loan for the combination of both. If you already know, which you will know by the time you get the fall bill, what your fall bill amount will be, just basically multiply that fall bill by 2 for the fall and spring. If you're a trimester, obviously by 3 and so on and so forth. And that will give you an idea of where you'll be for the full amount of loan requirement for you guys. Now, if you want more help as far as figuring out who the best lenders are or what the best rates are, so on and so forth, I will be posting on here a video, top 5 lenders, sometime around mid-June, telling you guys which loans I would suggest going with, the top 5 or so. I'll also indicate why they're the top 5 and different aspects of it, the way I've done in previous years. I have a link here for the previous year loan top 5 list, which I'll be doing again this upcoming June, typically around mid-June, before most families will be going out there and actually shopping around. Okay, so hopefully that answers your question there, Rick. Let's go to the next question here. Hi, thank you for helping us parents learn how to fund our kids' college. Could you make a video on how to withdraw assets to fund for college from 529 savings? Secondly, would it be a good idea to take out a subsidized loan, even if you don't need to use it, to keep up with a portion of the 529 invested? Thirdly, okay, so we have 3 questions here, but it's okay. Thirdly, how would you strategize impact a parent when filling out the FAFSA form for second year to lower their EFC? Okay, so a lot here, but let me get to the first part of the question. The first part of the question being, do I have videos on 529s? I do. I have multiple videos on the 529. So if you want more insight about the 529, perfectly fine. Here are the different videos I have just in the 529 process. If you want, I'll put in the description down below the links to these multiple different videos I have on the 529 process to give you more insight about the 529. Now, your second question here, is it a good idea to take the subsidized loan? I typically do tell parents to take the subsidized loan because of the fact that the federal direct loans that, let's say your student's going in as freshmen, obviously they're getting $5,500 of federal loans. Typically $3,500 of the $5,500 is subsidized. So those watching who don't know the difference between the $3,500 sub and the $2,000 unsub, which combines to give you the whole $5,500 federal loan, the subsidized portion means it's interest-free. There's no interest growing at all on this loan while the student's in school, up until 6-month grace period. Then the loan interest starts up again after they graduate 6 months after. So for me, I definitely look to take the least subsidized of the 5,500, so 3,500 of the 55. I do take that because I know it's interest free the entire time. So essentially, like something letting you borrow for free. Now there is a small origination fee, typically around 4.3%, which does take a hit as far as the origination fee is the first thing taken out, so they kind of add interest to the loan automatically. But over the 4 years, let's call it 4.5 years, that initial origination fee is not that big of a deal. So for me, yes, I would consider taking the subsidized loan. And then your third question, as far as lowering EFC, I don't know anything about you, unfortunately, as far as job situation, income asked, so on and so forth. So I'm not really sure how I would help you lower the EFC. But I do have other videos on here, and I will be making other videos going forward about how to find additional resources while your student's continuing in college. So hopefully those additional videos I have coming out will help you guys out with your third question here. Okay, let's go to the next questions here. All right, next question here looks to be from 9 days ago. Thank you for making such informative videos. I have 2 questions. First, each year of college, I will take out loans for my student. If I do a Parent Plus loan, can I take out the money to pay for 2 students at once? And second question, I am looking for a Parent Plus loan because I work in government and I'm hoping to stay and eventually obtain loan forgiveness. Is this a good idea? Well, let me just make sure I have the whole question. So it looks like longer. Yep, okay, I have both questions. Okay, we'll answer like before from Marissa here. We'll answer question number 1 first. When it comes to question number 1, when you guys take out the Parent Plus loan, even though as a parent, the name on the loan, the borrower essentially for the Parent Plus loan is only the parent, so that loan fund will basically be growing on itself. You cannot do one loan for both students. You will technically be doing 2 Parent Plus loans, even though the debt, the entirety will be all combined to one loan, by the way. But this is the way it works. When you guys take out Parent Plus loans, the way it works is since you have 2 students, you will be taking out 2 Parent Plus loans. Because even though you're the borrower, the person getting the money are 2 different people. So you must do 2 different loans because the Parent Plus loan, the federal government essentially doesn't allow you in the system to say, okay, I want to take out, let's say 100,000, give each kid 50. They won't let you do that. What you need to do is, let's just say the number that you need is 50,000 each kid, each student essentially. Since you only need 50,000 for each student, essentially what you would do is you would take out 1 Parent Plus loan for 50 and then indicate on that loan the student's name and where it's going to as far as the college, because you have to select that. Then you do the second student's loan, indicate their name as well and the school that's going to, and combine together, that'll give you the 100,000 debt for that year. However, each student must have their own individual loan because the federal government will send it out to each school individually. So if you're going to be doing a Parent Plus loan, perfectly fine, but you must make sure to do 2 of them every academic year going forward, so that way each one of them gets their own loan for that academic year. And now question number 2, I don't see a problem with doing the federal loans from the perspective of maybe considering federal student loan forgiveness. The tricky part is most of the time, whether you're looking at public service loan forgiveness aspects or if it's an income contingency program you're looking to go into to maybe do a student loan forgiveness, most of the time when it comes to student loan forgiveness, the federal loans do not provide forgiveness on the same level they do for the students. So if we're talking about students loan forgiveness, very likely could happen through public service loan forgiveness, income contingency programs, so on and so forth. Or income contingency programs and everything else they have available, like payee, and everything else. That's more likely to happen, especially since administration has been putting a lot of work in streamlining it for the student. Now, on the parent side, it's totally different. It's a lot more difficult, in some cases, unfortunately, nearly impossible to get the student to get student loan forgiveness. So what I would be considering at this point is looking at both the private and federal and state loans first to see who's giving me the best option as far as interest rate. And I'm more likely going in that direction because parent loan forgiveness is not as guaranteed, is not as prevalent, unfortunately, at this point, and has never been in the past the way it is for the student. So I'd probably be looking at, if the federal loans give me the best rate, then there might be the benefit of federal student loan forgiveness 5 years down the road. But if they're not, and the private lenders or state lenders are giving me 2, 3, 4 points lower in interest, I'm probably going in that direction. From Virginia here. Next question is, if your situation changes financially, can you ask the school for more help? And the answer is yes. If anything changes throughout the process of the academic year, where you have a job loss, medical expense, death of a family, death of a parent, anything that affects your financial situation, you can go back to the school and ask for additional financial aid consideration through what's known as a financial aid appeal. Now, the way it works is they're typically going to ask for 2 tax years. The tax year that was used for the FAFSA, they already have, so they have that information. but they're going to ask for the next upcoming tax year. So let's use this scenario of 23-24 academic year. You guys had to use the 2021 taxes. If there was a change, they're going to ask for the 2022 taxes to see how much of a difference in income or assets, how much of a drop you have, to see if they're able to assist you. In many cases, they're looking for at least minimum a 10 to 15% drop from the previous year's tax return to show them that income-wise, you are eligible for professional judgment, i.e. a financial aid appeal. Or if there's a job loss of at least typically 3 months or so, that's when they'll accept a job loss. Or medical expenses, pretty much medical expenses right up front, whatever bills you have can be utilized to do an appeal, but there has to be at least a big enough difference, typically 10% or higher, affecting your income from the previous year for them to accept a financial aid appeal. All right, next question here looks to be the last question here, coming in from Bill Green. Our savings jumped last year due to inheritance. We have always wanted to remodel our house and wondering if this would qualify as your 6 controversial methods for increasing financial aid. That is, if we invest in our primary property, we increase the home equity not counted while significantly reducing our assets or our savings. Am I missing something? I have not seen anything on strategy. And also, would we report our contributions to our Roth IRA? Now, the way it works is when you guys fill out the FAFSA form, the way it works is since the FAFSA doesn't count the primary home, if you are looking to use part of that inheritance or maybe all the inheritance, say to pay off your mortgage, that would be a good idea from a financial aid point of view. Now, I'm not telling you, obviously, I know nothing about you financially as far as your investment goals and everything else. So obviously, check with your financial planner, your CPA, whoever's doing your taxes and everything else, who's handling your financial situation, if this makes sense from your financial point of view, as far as you go into retirement and everything else you're considering. From a financial point of view, since I don't have any of your information on that, I would check my financial planner, whoever you work with, if this makes sense from a financial point of view. From a financial aid point of view, it does make perfect sense. From this point of view that the primary home, if it's just a FAFSA school, does not care if your house is paid off. So if you have a mortgage or don't have a mortgage, it's irrelevant. So taking the money and taking it out of checking, savings, investments, etc., that are not retirement based does help out because it does reduce the amount you're showing on the FAFSA, which then reduces your expected family contribution, allowing for more space for financial aid consideration. So it is a benefit to consider that. As far as contributions to your retirement, those are counted within the tax year that they're counting for the FAFSA. So to give you an example, 23-24 academic year starting next year for freshman students. If you did the FAFSA, and in 21, when you did all the FAFSA and everything else, when you did taxes and everything else, if in that tax year you had put money in retirement, that money you put in retirement would count as untaxed income essentially on the FAFSA form. It would be added back in. So depending on when you're looking to add the money into your Roth, it depends on whether or not it's going to count towards the FAFSA or not. Now, the entire year of your retirement doesn't count. It's just the contribution in the tax year they utilize that counts. So you have $1 million in retirement, that doesn't count. But if you put in $50,000 in retirement, that does count, whether it's 401k, 403bs, and Roths and everything else. That's the way to look at it. But if you're considering, let's drop the mortgage in the house, not worried about on the FAFSA, not a bad idea from a financial aid point of view. But once again, check with your financial planner. And all that being said, looks like we've come out to the end of the questions here. If you guys have questions, if you guys have concerns, you guys, once again, every Friday, I post back on the YouTube video here, all your questions answered in detailed video format. So that way you guys have all the answers to your questions. Also, all the views you guys are giving us here also helps the channel with the scholarship fund. So that also helps both of us here, as well as if you guys have any more questions or need more one-on-one help, let's call it. I do meet with families through Zoom one-on-one. So if you need help, I do help out. I do consulting, let's call it. So I do charge a fee for it, depending on how much time we spend. But if you want a one-on-one, very simple. On the screen is my contact information. If you want, you can text me, which is actually the fastest way to reach me. That's actually my cell phone, to ask for a consultation, and we move forward from there. Or if you just have a general question, you can also text me as well, or email me. But for any general questions, I would suggest putting them here on the YouTube channel, because I will be answering them in detailed format. So if you do need help, though, feel free to reach out. I do sit down with a lot of parents through Zoom to help them with both the admissions and financial aid process. And other than that, thank you for watching today's video.